Welcome back to Robinhood Stock Market Watchlist Group. My name is Carlos, and today is Sunday evening on July 25th. This is not financial information. We're just going to talk about stock market information and take a look at some activity. We always like to plan ahead, and so we'll kind of take a look at what's kind of going on right now, as well as what is scheduled to happen in the coming week. And so again, one of the most important things to always look at is what the government has planned for its economic reports, and there's a lot of activity scheduled for this week that we got to take a look at. So let's pull some information up on that right here. So here on Monday morning, about 30 minutes after the stock market opens, the new home sales report for the month of June will be released. And so where the previous report was released at 769,000, so this forecast report is scheduled to be at 800,000. So that's looking pretty good. So far, there's a lot of activity with construction right now. There even though there's some shortages, but and inflation, but that doesn't seem to be really slowing it down much. So as long as the report meets or beats the previous report, we should be fine. But if it meets or beats the forecast report, we're even better. But if it falls below the previous report, we could be looking at some bearish activities with that, but it could be overwritten by other activities that could be going on internationally, because when there's other events that happen in other countries, especially throughout the weekend, just like last weekend, it really created more bearish activity for our last Monday than what was anticipated. But other than that, things went back on track. So far, Monday's looking pretty good. But we'll take a look at some other activity like U.S. futures and a couple other things that's showing some unusual activity. So going into Tuesday, July 27th, we have the core durable goods order report for the month over month for June, and this is scheduled to be reported about 1 hour before the stock market opens. And so the core durable goods measures the change in the total value of the new orders for long-lasting manufactured goods, excluding transportation items. Because aircraft orders are very volatile, the core number gives a better gauge of ordering trends. A higher reading indicates an increase of manufacturing activity. So that's kind of what we're looking for. So the higher number, the better. So, but it looks pretty good, especially as more demand for things, as well as more people kind of, going back to work. And so the previous report was reported for last month of at 0.3%, where this one's forecast to be at 0.8. So it definitely seems pretty good that it should at least meet or beat the previous, if not meet or beat the forecast. So that definitely looks pretty good there. So it looks like we're having some quite a bit of bullish characteristics between these few not earning releases, but economic reports. So the next economic report is the CB Consumer Confidence Report for the month of July, where it doesn't seem like it's that high right now, because there was some minor issues, it seemed like. But the previous report was reported at 126.3, where the forecast now seems to be anticipated to be a little less at 124.1. And so this report is scheduled to be released at 30 minutes after the stock market opens. So we could going into Tuesday morning, we could see a green pre-market, but after that 30 minutes from the stock market opening, we could see some weird hesitation from investors, just kind of waiting, not really buying or selling, just waiting to see what happens with this report. So we got to really watch it, because whatever it does, whether it's green or red, most likely the market may follow. So that kind of depends. As well as going into the next day on Wednesday, July 28th, is going to show, or we're going to see a lot of extreme volatility on this day, because there's a lot of government meetings as well as economic reports, but they're really going to start talking about the inflation and interest rates. But the first thing is the crude oil inventory reports, and so this is a number that we need down. So as long as this number is low, as much as it can be, that's good. So that'll at least provide some kind of bullish characteristics. Last week's crude oil inventory was up really high, and so. But it should definitely be a lot less than what it is now, and so, but that was to be expected. Every week for the last a few months, it seemed like that the crude oil inventories was getting lower and lower. I mean, eventually it needed to bounce at least a little bit, and it did bounce quite a bit, and so it should be more than likely that it should beat whatever the forecast is. Now it's blank for now, but it will populate a new forecast most likely tomorrow morning or sometime midday. Once the government or whoever puts a forecast number on here, it'll be on there. But I'm pretty confident that it should be it. But so going into 1400 hours, so this is going to be a couple of hours before the stock market closes, is when we're going to see a lot of these government meetings. Probably even see the Jerome Powell even talk, but we'll take a look at some things here in a little bit. But just know that within a couple hours before the stock market closes on Wednesday, there's going to be a lot of volatility. I mean, it could go both ways. It could drop significantly, and then it can bounce back up significantly. So it just really depends. So just proceed with caution, especially if you're a day trader or a swing trader. Wait for if you're going to swing trade, definitely wait for as you get closer to power hour, watch your moving averages and look for patterns. If it does drop, watch for a significant drop. Normally we'll see, as long as you're looking at the advanced charts, usually you'll see at least about a 3-point dip. So that's when you want to start focusing in on your buying signal, usually when it dips on that third dip. So just stay focused. So just know, a lot of crazy stuff's going to happen on Wednesday. Wednesday is a really big day for our day traders, because volatility is what we're looking for to make a lot of money. And so if you're in the options, consider doing a straddling strategy, because that way you can play it both ways. So going into Thursday, July 29th, we have the GDP quarter, or the second quarter report is scheduled to be released 1 hour before the stock market opens. The last report for the first quarter was 6.4%. So 8.6% is quite a bit. And so just to let you know what this is here. The GPD is basically your gross domestic product that measures the analyzed change in the inflation adjusted value of all goods and services produced by the economy. It is the broadest measure of economic activity and the primary indicator of the economy's health. And so that this is a huge number. And again, there's a lot of economic reports that we see on a weekly basis. There's a lot of economic reports that we'll see on a monthly basis. And there's just really a few that we'll see quarterly as well as yearly. And so this looks good so far going into Thursday morning. So even if Wednesday evening just plummets, we want to buy. That is a great opportunity. Bad news is great news. And so just wait for that massive dip, and we'll just start buying because going into Thursday morning looks pretty promising. And so and as well as the unemployment report, the initial jobless claims, which will also be reported at the same time that the GDP quarterly report is reported. And so last week the unemployment report was very surprisingly high, significantly higher than anticipated, but with something like that, and again, the unemployment report, just like the crude oil inventories, kept going down on record levels since the beginning of the pandemic. And so it was bound to bounce up. Eventually it did significantly. And so I would definitely anticipate that the unemployment report will be a little less than last week. And so that will just help add to the bullish characteristics from the other economic reports. So Thursday looks good, and then 30 minutes after the stock market opens, we have the pending home sales month over month for the month of June. That is looking like it's going to be down quite a bit compared to what it's been lately. This is basically we're going to start seeing that home sales and pretty much automobile sales are going to start kind of to decline a little bit. And so as this may be one of those things where as the government starts to talk about interest rates, they may be, there's a lot of politicians that want to increase interest rates now. And if they do, then that could provide very bearish characteristics for the stock market. But there's a lot of politicians that want to keep the interest rates where they're at until 2003. But there's a lot of politicians that have said that we've pretty much locked interest rates at a very low point until at least going into next year of 2022. So but really that's right around the corner. So investors kind of look at things a little early at times. So they could be kind of looking at that towards the end of summertime, which is really in a few months. So stay focused. So again, on Monday, going into Monday morning, looks pretty good so far. But again, we'll have to look at some other things here in a little bit because we may see some interference. But then Tuesday morning looks really good, as well as the Tuesday evening, or going into Tuesday evening. Since the number looks a little down, I'm just a little worried that Tuesday evening, could have a possibility of closing in the red. So hopefully not. But then going into Wednesday morning, looks. Wednesday in general is just going to be unpredictable because investors are going to be very nervous. We may not see a whole lot of buying activity. We may see a lot of selling activity because investors may not want to be holding through this mess. And so, but we're going to see a lot of day traders also, sitting back and waiting on the sidelines, waiting for these massive dips to happen. So we just got to really focus in on this particular day. So this is very, out of the whole week, Wednesday is going to be extremely volatile. Thursday again morning looks really good. Out of all the days, Thursday looks like it's probably going to be the most promising day, with the most certainty of that it will have the bullish characteristics. And then Friday, nothing is scheduled for Friday, so it's kind of on autopilot. So it really just depends. Because it's Friday, usually we may see some bullish characteristics in the morning, especially during pre-market, as a lot of people bought and holding on Thursday, maybe selling on Friday. And a lot of investors don't like to hold throughout the weekend, or maybe not hold throughout the day, and then they'll buy maybe a few minutes before closing on Friday, holding through the weekend, because usually Mondays can usually typically are very bullish, especially during pre-market and opening. And but yeah, this is a good report. And then if we look into the next following week, on Monday, August 2nd, which there really isn't very many economic reports on a Monday and a Friday. So this coming on the first week of August looks very kind of interesting. There's not a whole lot of reports, but the ones that there are either at the beginning or end, or a little bit in the middle. So this is kind of interesting. But going into Monday, this report is scheduled to be released 30 minutes after the stock market opens, which is your ISM manufacturing report for the month of July. Looks like that it's forecast to be a little higher than the previous report, not by much, but that should be pretty good. As long as it can meet or beat the previous, we should be fine. If we can get to 61, we're even better. So, but we'll take a look at this again, because the government may add more scheduled economic reports for this week. So we'll look at this next weekend when I post the next Sunday video. So let's stay focused for this week, and we'll revisit this later once they kind of populate some other forecast figures in here going into Monday morning. So this is going to create the most volatility activity in the entire stock market system. However, it's going to be a massive earning release week. So let's take a look at that. We'll take a look at that in our Facebook group. And so every post that I post is always in our saved in our announcement area. So you can find that every Saturday or Sunday I will post a lot of information, highly valuable information on these scheduled earning release that you can find here, that are scheduled each day of the week before opening as well as after close. And however, I also post the top 10 analysis with a lot of valuable information in there as well. So let's take a look at General Electric. General Electric is scheduled to release their earning report on Tuesday morning, right before the stock market opens. The company's earning release has a 69% expecting an earnings beat. So that's about average. Average is around 67% ish, around there, more or less, give or take 1 or 2%. So it's definitely in there. So Lockheed Martin, and so I post a lot of valuable information, maybe some clues, and it could even be in the image. And so the average Joe looking at the company name Lockheed Martin wouldn't really know what kind of company that is, but by looking at the image, it's like, okay, they're military weapons. And so they are scheduled to release their earning report Monday morning, a couple hours before the stock market opens. And so the company's earning release has a 68% expecting an earnings beat. And since I've been doing this for the last several years, this percentage is the highest percentage I've seen this company expecting an earnings beat. And so, however, we're in a new government administration as well. I think our administration is probably a little bit more into military investments. So this could be a good year for this company. So let's all eyes on Lockheed Martin for this week. Make sure you put that on your watch list, as well as Boeing. probably not as well. Boeing is confirmed to release their earnings Wednesday morning before the stock market opens. The company's earning release has a 61% expecting an earnings beat, so just a little below average. UPS is scheduled to release their earnings on Tuesday morning before the stock market opens. The company's earnings release has a 77% expecting an earnings beat, which is way above average. And this is a busy company. They are, both them and FedEx kind of help each other out, when they all, with this whole online ordering thing. They're extremely growing. They're definitely one of those pandemic stocks. So the company's earning release has 77% expecting an earnings beat. That's huge. Next one is Facebook. Facebook is confirmed to release their earning report on Wednesday evening, right after the stock market closes. The company's earning release has an 85% expecting an earnings beat, which is huge. And so I don't know if you've seen some of their competitors like Twitter and Pinterest lately, but they've there's been a lot of activity on social media lately. So Facebook is going to reach the news. So you know what the pros say: buy on rumors, sell on news. So just be careful when you're playing into earnings. Microsoft right here is scheduled to release their earning report on Tuesday evening, shortly after the stock market closes. The company's earning release has an 81% expecting an earnings beat. And so I wanted to put a graph here with kind of showing you how Microsoft's revenue breakdown looks like. That way you can see that they're not just making a ton of money on gaming and Xbox and whatnot, or PC games. It's only about 9%, but a lot of their revenue comes from server products or Office products, especially Microsoft Windows, like Windows 10 and whatnot. Now, talking about the server products, we got look at what just happened in the last several weeks. With the government kind of wanted to postpone this whole little server ordeal, giving possibly Amazon another chance. And so this could leave Microsoft at jeopardy of this contract deal with the government. That way they can provide server products. So we'll really have to kind of focus more on that, before the earnings and see if anything has changed. But just be careful on that one. Even though it looks like it's a high percentage, 81% is way above average, and is very rare. You don't usually see anything over 80%. Especially when you're looking at odds. That's like 4 out of 5 odds that this stock's going to beat their earnings and possibly even their revenue. So but we'll wait and see here. AMD is scheduled to release their earning report Tuesday evening, shortly after the stock market closes. The company's earning release has an 83% expecting an earnings beat. That is huge. Again, that way above average. And again, you just don't see this percentage in the 80% range. So good for AMD. Amazon, Amazon's been very, very active, especially in the options world. Same thing with AMD. Amazon is scheduled to release their earning report Thursday evening, shortly after the stock market closes. The company's earning release has an 87% expecting an earnings beat. I think that's the highest percentage for this week. 87%. That's almost 90%. You're almost at that 9 out of 10 odds. This stock's going to meet and beat their earnings. So this is going to be very, very interesting to see. It's going to be all over the news. We're going to see a lot of options activity on this. And especially this, Jeff just went up to space, so that could also provided a lot of advertising for Amazon and a lot of activity. I know, and keep in mind they just released that movie on the Amazon Prime, the Tomorrow's War. That was one of the most watched movies lately. I don't know if you've watched that movie. I mean, it's a great science fiction movie. but it was phenomenal. Definitely very emotional on that one, but that may have caused a lot of people to sign up for Amazon Prime. So this is going to be a very, very interesting earning release. So Tesla, just not sure, how this one's going to play out. However, Tesla's confirmed the release of their earnings Monday evening, shortly after the stock market closes. The company's earning release has only a 58% expecting an earnings beat. That is pretty low. But that seems to be kind of their normal thing lately, especially with their options calls versus put ratio. It almost seems to be around a 60% call, 40% put ratio, which really isn't good. So it just seems like a lot of people are expecting Tesla to come down. But I've seen that with Tesla for years, and so. But when you look at the moving averages with Tesla, they have really been downtrending for several months. So we'll see what happens here. Next one, or last but not least, I believe is Apple. Apple is confirmed to release their earnings report on Tuesday evening, shortly after the stock market closes. The company's earnings release has an 82% expecting an earnings beat, which is not bad. Again, way above average. Again, I always like to put clues in the pictures as well, reminding you that Apple is planning on getting in the car business. They've did release some kind of clues lately about them working on the battery packs for their car design, and so really they don't usually talk too much about it. Apple doesn't like to manipulate their stock too much unless it has. Usually when they do, it's most people think it's when they release a leak, when it comes to like their case or cameras or whatever, that seems to really spice their stock up a little bit. But again, if you didn't know, they do plan to get in the car business, and they do plan to release their car by 2024. And so but anytime they mention a little something, a little clue, there's usually a little bit of a surge with their stock. So Apple's going to get a lot of attention this week, so we've got to really focus in on that. So then we have the top 5 things that we need to really watch ahead for this week through investing.com, which is always a good idea to kind of take a look at, just to make sure we didn't miss anything. So the first thing is the Fed Tapering Talk. The Fed wraps up its 2-day meeting on Wednesday, as its statement will be scrutinized for any mention of the time frame for tapering its asset to purchase program. Although Chairman Jerome Powell made it clear in his recent testimony to Congress that the United States economy still needs the central bank's full support. In June, the policymakers began debating when to start cutting monthly purchases of the $120 billion treasuries and mortgage-backed securities. Powell may indicate that while a discussion on tapering has started, there is still time before officials reach a conclusion on what they will do. Policymakers are expected to highlight the risk from the rapid spreading Delta variant, which investors worry could derail the economic recovery. Most analysts expected the Fed to give a clear indication of its plan for scaling back its quantitative easing programs as its annual conference in the Jackson Hole, Wyoming in late August, before a formal announcement in tapering later in the year. So again, the key thing was Wednesday. Volatility again, so be prepared. Number 2, data dump. Aside from the Fed meeting, investors will get an update on the strength of the United States economy with an end of month data dump. Monday sees figures on new home sales, which are expected to hit new highs, followed by durable goods orders and consumer confidence on Tuesday. Again, these were things that we were just talking about, so it looks pretty good. The highlights The highlight is on Thursday with a first look at second quarter GDP. While expectations have been trimmed back in recent weeks, growth is still expected to be strong at 8.6 annualized. This would mark the recovery of all the lost output caused by the pandemic and could be the peak of the post-pandemic recovery. Figures on personal income and spending are due Friday, which include the Fed's rumored favorite measure of inflation, the core personal consumer expenditure price index. So it looks like there may be a little bit of some activity on Friday. So we'll may have to take a look, see if there's anything major, because that part there might not have a big impact on the stock market, unlike some of these most of these other ones we were talking about. So number 3, earnings deluge. U.S. or the United States earnings are kicking into high gear, and investors will be watching the largest tech names to gauge whether a recent shift away from reflation trade and into growth stocks that led markets for the last decade will continue. So the earnings from Apple and Alphabet, which is Google, is on Tuesday, Facebook on Wednesday, and Amazon on Thursday, could accelerate a shift back into growth. So we'll see about that. But then again, you have your FANG stocks, which is your Facebook, Apple, or Amazon, Apple, Netflix, and Google parent Alphabet are usually known for delivering stellar stock market returns, but only Facebook and Alphabet have beaten the S&P 500 so far this year as investors piled into financials, energy firms, and other companies that should benefit the post-pandemic economic rebound. Other earnings results that will be in the spotlight include Microsoft, Tesla, Boeing, Caterpillar, Pfizer, Procter & Gamble, and McDonald's. So again, earnings report is going to be it's going to provide a lot of volatility. Usually it can provide, it's just going to provide a lot of volatility. So it's going to be a crazy week. We're going to see a lot of news. So number 4, market volatility, growth and value stocks seesawed for much of last week as investors weighed the surging Delta variant against upbeat earnings results and economic data. There's a quote here. Let's see. What's on that one there? All 3 major U.S. stock indexes closed at record highs on Friday, with the Dow closing above the 35,000 for the first time ever, following a volatile week as risk appetite waxed and waned. On Monday, the S&P recorded its steepest one-day drop since May, before going on to post its biggest one-day jump since March a day later. Earnings and data could soothe the accelerate bait market against in the coming week. So, and then number 5 is Euro area recovery in the Eurozone. The second quarter GDP data on Friday will give investors some insight in the strength of the bloc's economic recovery from a double dip recession as vaccinations pick up. So, as you can see, it's going to be a very, very, very busy week. And so, but however, we can look at the futures right now as it is Sunday evening. We do see that the futures are down a little bit. So we do see that the NASDAQ is down, just 0.04%. And then you have your S&P 500 at 0.31%, and then your Dow Jones at about 0.5%. And so some of the other things that we'll need to take a look at is because some of the markets have opened overseas in Asia. They have dropped significantly. A lot. And this is like unusual. We have Asia or Hong Kong and Shanghai, both are down around 3%. And there's another piece up here that's almost down 5%. At the same time, we have a cryptocurrency that is up a lot right now. Even a Bitcoin has recently, surged, a lot. I mean, Bitcoin earlier today was around, just under 34,000 and is now about 39,000. Or a Dogecoin. You can see Dogecoin was down just not that long ago. Almost 20 cents. A couple weeks ago, and now here it is at 23 cents. And so there's definitely a lot of activity going on. And so let's take a look at some options activity from last Friday. Let's take a look at the most highly active stock options. This is last Friday's activity. As we're entering into this week, we can kind of see what people were kind of investing last Friday that may carry over into this week. So last Friday, Apple stock option was the most active stock option with a total of 1.6 million in stock options volume. And out of that was 74% of it was calls activity, betting that the stock's going to keep going up, or just under 26% are betting against the stock, betting the stock's going to go down. And then here's Facebook. We were just talking about Facebook. Facebook is second place on this list, which it's never second place on this list. Usually Apple's on this list. It's usually first place. That's normal. People love to day trade Apple, especially when it comes to the stock options. Apple doesn't move that much. It moves maybe 1%, 2%, if that. Its moving averages are very, very predictable, and that's why people like to day trade that. And so, but Facebook is on the top of this list. It's usually in the middle, maybe on the lower area. It's normally on this list. It's just never on the top. And so Facebook is up 5.3% at $369.79. It has 1.1 million in options volume at almost 75% call ratio, which is above average. Normally, an average call ratio is about 67%, so this is definitely way above that. Or 25% are betting against the stock. Maybe they're doing a straddling strategy, just in case. We'll see. And then AMC always gets a lot of attention and is third place on this list. It's just shy of $37, but it has a lot of options activity with a 59% call ratio. That's not good. And so this could be just, hate to say it, maybe beating a dead horse, but I predict that we're going to see more AMC activity as we enter the month of September. So we're still we're almost about a month away. So just hold on, and or just, if you haven't invested yet with AMC, just wait, buy on some of these big massive dips. But I predict that we're still going to be a little ways away until we see some great bullish activity with AMC. So but for now, for the next several weeks, we could see a lot of bearish characteristics with AMC. Tesla's fourth place on this list. It's usually on the top of this list. It is just hovering around your $643 area. 836,000 in options volume, but out of that volume is almost 57% in call ratio versus 43% are puts, betting the stock's going to go down. So to me, this is almost kind of 50-50. I don't like that. We looked at the earnings report, the analysis, where I felt like that was almost 50-50. This is a very high risk earnings report with Tesla. Out of all the top 10, this is probably the highest risk one right there. Big gamble. Snapchat did phenomenal last Friday, almost 24% that it ended up, $15. They're in some like uncharted territory right now. They're not normally on this list, on the top of this list, but they are last Friday before close with an options volume of 729,000 and the call ratio of 59%. So that's why I think that's just down because it's an uncharted territory. But it's a very low call percentage ratio, so it's a very high percentage for the day. It definitely deserves to come down a little bit before it can come back up. I think so. Nvidia is right here. It's been several days now since Nvidia did their stock split, so they're just kind of hovering around kind of where they split. So kind of to be determined what it's going to do next. So it's just kind of forming a new algorithm, and I think investors are kind of watching to see what it'll do. Usually after a stock split like this, usually the stock plummets quite a bit, and so it really didn't do that. I think it went down to like 185 or something like that, and then it bounced back up to 195. And so we really anticipated it to dip down more. I would think probably a little less than 150, but we'll see what happens. We're still watching. Intel is usually on this list, usually more in the middle or bottom area, but they were down quite a bit on Friday, down 5% at 56% call ratio with almost about 44% put ratio. That's not good. AMD is also on this list. That's normal. They're up 1% with a 78% call ratio. That's really, really good and above average. And then going into this week, I mean, they have earnings coming up, so I think a lot of people are getting ready for that. And so NEO, not looking good for NEO. I think once pre-market starts Monday morning, NEO could be in the red as well, especially with how China's market is deeply in the red right now. We're going to see some huge discounts on Chinese stocks, so that could be a good buying opportunities. But we have a call ratio of 66% and a put ratio at 33%. Alibaba, same thing. It's going to be in the same boat. It looks like these were really in the red last Friday. So Amazon is also on this list. That seems to be normal. It seems to fluctuate around the middle. They're 63% call ratio. That's pretty good. There's definitely more here. We'll take a look at anything unusual. ATOS is on the list. I never see it on the list, so that's one unusual point there. Next one here is 91% call ratio. That is highly unusual. You never see anything in the 90% ratio here. I mean, that's the only one that's in the 90% ratio that's on this list. So and it's got a good amount of options volume right now. So definitely let's keep ATOS on our watch list for the whole week and do some research. It looks like it's up about $4.18 right now, only 1.7%. But this could be a stock that's flying under the radar. There could be something big that's about to happen with this. So let's be sure to take a look at all of the most active calls and puts for this stock. Anything else here? Mostly puts on that one. Any other high percentages? No, I don't really see anything. We have the Clover Health investments. A lot of people I've seen on social media talking about the CLOV. They have a high call percentage but they're in the red on Friday. So to me, it looks like a lot of people are trying to buy their costs down. And so definitely don't want to be a part of that, but since there's a lot of activity, we definitely want to keep an eye on it just in case. And so let's take a look at the options volume leaders really quick and see we're going to take a look at anything that's currently active, not expired, so that way we see kind of what people were buying right before close on Friday. And so the first one that is still open, that's active, is the Apple $150 call strike price that expires this Friday on the 30th. Has an open interest of just around 66,000 with the volume of 66,000. So this will be merged with the open interest, so it'll be a very high number. So we'll continue to see a lot more activity with this $150 call strike price with Apple. Second place is EDU, which is currently at $2.93 with a $5 call strike price that expires next month on August 20th. It had an open interest of only 3,000 and now the volume of 55,000. This wasn't doing anything, and now all of a sudden, bam, this is like 99% unusual buying activity. Definitely put this on your watch list, see what's going on. Even if you're not into stock options, that's fine, but this is very valuable information. If a lot of investors are betting that this stock's going to reach $5 and it's at $3 right now, and if you buy and if it does reach $5 by next month, you just gained what, 75%, 80%. That's huge. So make sure you put EDU on your watch list. Let's start doing a little bit of due diligence on that and figure out what is making people believe and putting a lot of money into this strike price. So the next one is an Apple $55 call strike price. Now we're starting to see a lot more, bumps up on Apple as we get closer into its earnings date. So $55 call strike price with the same expiration for this Friday the 30th. Had only the open interest of 47,000, now the volume of 48,000. We have the ATOS again with the price at $4.18 with a call strike price at $4. So it's already in the money, but it does have the expiration date for this Friday the 30th with the open interest of only 2,500 and now the volume of 47,000, which is huge. This was hardly doing anything, and now it's doing a lot of something. These could be flying underneath the radar, so we really got to put these on our watch list. Let's do some heavy due diligence on both EDU and ATOS, because there's a lot of people putting a lot of money into these guys for some reason. And so let's be sure that we not miss an opportunity. And so the next one, there's another EDU with a much later expiration date for January 21st, which is around approximately 182 days, which is interesting because the price of the stock right now is just under $3 with a put strike price of $2.50. So open interest also very low, just a little over 1,000, and now the volume of 38,000. So it almost kind of looks like now this may be more or less a straddling strategy. And so this could be as the majority of the investors of the stock option are betting that it's going to go up, but some of them look like they're starting to kind of bet on a put, betting against it as an insurance. Now straddling is good, because if you don't know stock options, you can only lose what you put into one, but your gains on the other are unlimited. So if you put however much into a put and you put the same amount into the call, and if you lost a lot on one, you can gain a lot more on the other. That would wash out the loss on the other and still put you ahead. So straddling can be a phenomenal strategy. That way you can have your cake and eat it too. So the next active stock option or call or put is this other EDU. And this call strike price is at $7.50. So far we see 3 EDUs that are highly active. 2 of them are a call, while 1 of them is a put. So it looks like the favor is on the call. But this is huge, $7.50 that expires this October the 15th in approximately 84 days. This one had an open interest of 31,000, so it already had some interest to it. Volume does exceed it, which is good. That's what we want to see. It's almost at 35,000, so it's definitely showing a very good amount of unusual buying activity. Then we have TAL, which is currently at $6 with a put strike price at $17.50. So it's obviously already in the money. But this one expires this next month on August the 20th, approximately 28 days, with an open interest of 58,000 in the volume of 33,000. So the volume is definitely a lot less than the open interest compared to some of the other ones that we were looking at. I'm not sure what's going on. We'd have to look at the charts and stuff. This could be a stock that maybe have already plummeted. So we'll have to take a look, because this volume activity could be pure selling activity. So we don't know until we start doing a little bit more research, but there's some weirdness going on with TAL. Facebook is right here. Facebook has a $400 call strike price. That is huge compared to what it is right now, just under $370. But the $400 call strike price expires this Friday on the 30th, with the open interest of just 4,000 and now the volume of 33,000. So there's a lot of people putting a lot of money on this. And look at it, the last price per contract is basically $218 per contract. So if let's say 30,000 of this is buying activity. So if we did $218 times 30,000 buys, that's $6.5 million that investors are betting that Facebook is going to reach $400 before this Friday. And so that is a lot of money, and that's a lot of confidence right here. And so just definitely let's keep this on our radar. There's another Apple right here, is also active. Apple with a $160 call strike price that expires this Friday on the 30th. That's huge. That's probably the largest call strike prices that I've seen. That's pretty active right now, though the open interest is just under 55,000. Volume is just a little over 31,000. I wish we could see that a little bit more, but we could see more activity on this call strike price as we go into the week. So we'll keep an eye on that one. There's another TAL with a put strike price at $15. So just more unusual on that strike price. So a lot of great information here, and if you ever have any questions, be sure to message me on Facebook Messenger. We spend a lot of time posting a lot of information in our Facebook group, so be sure that you always stay tuned, stay safe, and make good choices. Good luck. Thank you for watching, and be sure to subscribe. That way you always get notified anytime I release a video. If you want alerts on my posts on the Facebook group, just be sure to go to my profile and click follow. That way you get notified anytime that I post a post in our announcement area in our Facebook group. Thank you guys. Good luck. Have a great week.